Harris, we've seen so much change in the past at least 5 years, where we're looking at U.S. companies slowly pulling out of Africa or not investing as the case was earlier. Now we're looking at China taking much of this investment into the region. What do you think is the real reason behind this?
You raise a great point, but I think we need to distinguish a bit in terms of the types of American companies. There's some who are deeply committed to Africa and are there to stay and are really seeing returns and doing well. But there's a broad swath of American companies that were a little bit interested as they saw the Africa Rising narrative and now are taking more of a wait-and-see approach. And these are the types of companies that really need to be attracted to the continent if we're going to unlock the type of capital and American investment that we need to for the economic growth. And so as you see China and as you see other countries make such aggressive commercial plays, it's incumbent upon U.S. companies as well to be very serious and strategic, to think about how Africa fits into their own growth strategies, and also for the U.S. government to be supportive with financing, political risk insurance, and commercial advocacy.
Harris, you're speaking about strategies, and this brings me to the AGOA, the Africa Growth and Opportunity Act. Since 2000, it's been looking more for growing Africa's export, but also trying to bridge the investment opportunities in the region. But this continuity for Trump's administration, even Obama picked it up from Bush administration, has not really seen any changes, even though Africa's investment climate changes time after time. Do you think it's being done as opposed to what the current situation suggests, or does it need to have a review to better give a better deal for African economies?
I think the African Growth and Opportunity Act remains important, but it also remains underutilized. And the issue that we really need to address goes to capacity and goes to the ability for African states to maximize their usage of these unilateral trade preferences to get their to get their goods into U.S. markets. I think the issue is not so much to continue AGOA as we should, but also to think about what will two-way trade deals look like going forward? How do we build this capacity so that there can be greater trade numbers and flows? And how do we also attract the type of investment that we want? And it gets back to those two critical words that you mentioned in the question, investment climate. Investment climate should be the two most spoken words by any African leader in trying to think about how his or her state is going to be drawing that capital and realizing that African states are competing not just with one another, but with every investment climate around the world to try to woo that capital and show that there is rule of law and good governance and stability and predictability, and that capital can find returns.
Now, you did mention something about instability, and this drives me to my next question that has to do with the U.S. commercial engagement in Africa, which is currently waning. If you look at 5 years ago, the U.S. export to sub-Saharan Africa dropped to an average of $19 billion. That's from $100 billion as of 2008 and $39 billion in 2017. What is this part of the political instability in the region, or maybe with South Sudan, as you mentioned, or is it necessarily as part of the energy self-sufficiency that the U.S. has been seeing as time went by?
I think it's a mix of issues, and part of it has to do with the broad macroeconomic picture and the slump that some of the major African economies have been in, and some of the currency volatility, and some of the other issues that have really dissuaded the FDI flows that we want to see. Part of that is a broader global issue, and part of that is quite specific to Africa. I think the issue with American companies in the last few years is that the Africa Rising narrative, it took quite a hit when commodity prices slumped. And some of the African markets that were looking to attract these companies had less of a persuasive story. That's not to say that some African countries aren't doing well, it's just very mixed. And I think that we really need to unpack that a little bit. Some markets are going to continue to be attractive for American investment, but we're going to need to see stronger macroeconomic policies in place and more policy consistency to really get American investment in the type of numbers that I would like to see.
Now, Grant, maybe probably my last question has to do with U.S. now engagement with financement for some infrastructure development that we're seeing in the region. Now, we saw the EU, the European Union, pledging up to $54 billion in sustainable investment for Africa by 2020. We're looking at China extending up to $86 billion in commercial loans to African governments. We haven't seen that much of a conversation around American companies or even the American government itself. What do you think about, maybe let's drive it to a little bit on Trump policy when it comes to African nations. Where does this stand?
It's a great point. And the Trump administration needs to look around and really wake up and smell the coffee when it comes to deepening engagement with Africa. President Obama, I think, was exactly right in starting Power Africa and in realizing that the United States could play a helpful role in mobilizing capital and partnerships and leveraging over $50 billion in partnerships to date to help electrify the continent. And he was also exactly right in trying to support young leaders with entrepreneurship, seed funding, and with leadership skills. President Trump has opportunities to do the same. He so far has continued Power Africa, albeit at a less aggressive posture. And I think that's really important to do. Secretary Ross, the United States Commerce Secretary, will soon be traveling to the region. And I think that's an important trip. I hope that he and his team take back a message to Washington that there is massive economic potential, but that the U.S. government needs to be encouraging and supporting American companies in taking advantage of this economic growth and participating in it. That means supporting political risk insurance. It means supporting financing tools, supporting commercial advocacy. And the dangerous piece is that in some of President Trump's budgets, he's really proposed massive cuts, not just to assistance, but to the types of U.S. agencies that are providing these tools. Again, it won't be the U.S. government that determines the level of American investment, but these signals are important. It's important for the U.S. government to be talking about how Africa can be a center of global economic growth and talking about and supporting these companies so that it's part of de-risking the investments that can be made. I think if we see that, and if we see more American companies then going to the continent and really seeing these returns, that will be the key over time to get the type of numbers that we need.